Good morning, students. In the last class, we discussed with the functions of the Reserve Bank of India. Okay, so I'm going to share that one with you. So, what are the functions with regard to that? First is the monopoly of a note issue. That is the first main. What is that? The function. Another function is what? That is the banker. This bank acting as a banker to the government, like acting as a banker, acting as a financial agent, and acting as a financial advisor. Then the custodian of the forex reserves should be there, and also acting as a banker's bank, then bank of settlement and clearance, information and research function, then controller of credit and RBI as a lender of last resort, അവസാനത്തെ ആശ്രയം. Okay. These are the functions with regard to the Reserve Bank. And the final thing is that is the quantitative and qualitative credit control measures are there. So what is a quantitative credit control measure? To regulate the volume of the credit created by the banking system. So that regulate the volume of the credit that is to be created by the banking system, that is the quantitative, while the qualitative, it means what? Designed to regulate the flow of credit in specific uses. Then, following are the various quantitative credit control weapons that are used by RBI, that is bank rate policy, one of them. So, there should be a standard rate fixed by the bank. അതായത് ഇതിന് ഇത്ര പലിശ അതിന് ഇത്ര പലിശ എന്നുള്ള that is the standard rate, അതാണ് bank rate policy. So we are going to see what is a bank rate policy. Section 49 of the Reserve Bank of India Act defines a bank rate as the standard rate at which the bank is prepared to buy or discount the bill of exchange or other commercial papers eligible for purchases under this act. So section 49 of the Reserve Bank of India Act defines a bank rate as the standard rate at which the bank is prepared to buy വാങ്ങിക്കുകയോ അല്ലെങ്കിൽ to discount the bill of exchange, വരുന്ന ബില്ലിനെ ഡിസ്കൗണ്ട് ചെയ്യുകയും ചെയ്യുന്നതിന് a standard rate is to be fixed. That standard rate is called the bank rate policy. So define the bank rate as the standard rate at which the bank is prepared to buy or discount the bill of exchange or other commercial papers eligible for the purchases under this act. The importance of the bank rate lies in the fact that it acts as a pace setter to other market rate of the interest. An increase in the bank rate will be followed by the change in the interest rate that is to be prevailing in the market. Bank rate changes have been made frequently, and the present bank rate is 6.5% with effect from 6/4/2017. That is the bank rate, the standard rate fixed for purchasing the what is that, or for purchasing or to buy or to discount the bill of exchange or other commercial papers that is eligible for the purchases under the act. Then repo rate. Repo rate is the rate at which the RBI lends the money to commercial banks in the event of any shortfall of funds. So repo rate is the rate at which the RBI lends money to commercial banks. വാണിജ്യ ബാങ്കുകൾക്ക് പണം കടം കൊടുക്കുന്നതിന് ഉള്ള റേറ്റ് ആണ്, that is the repo and the reverse repo rate. So the repo rate is the rate at which RBI lends money to the commercial banks in the event of any shortfall of funds. ഫണ്ട് കുറയുന്നതിനനുസരിച്ച് അതിന്റെ രീതിയിൽ they need to give a rate for the lending of the money to the commercial banks. That is the repo rate. Means repurchase rate, വീണ്ടും വാങ്ങിക്കുന്നതിനുള്ള ഒരു റേറ്റ്, അതാണ് repo rate, RR എന്ന് പറയുന്നത്. So therefore repo rate is the rate at which the RBI lends the money to the commercial banks in the event of any shortfall of funds. അതായത് പണം കുറയുന്നതിനനുസരിച്ച് കടം കൊടുക്കുന്നതിന്, or RBI is giving the money to the commercial banks. So that should be at a certain rate. That rate is the repo rate. So the RBI lends money to the commercial banks in the event of any shortfall of funds. That rate is called the repo rate or the repurchase rate. Then It is the rate in which banks borrow money from the RBI for a shorter period by selling their securities to the RBI with an agreement to repurchase it at a future date for a predetermined price. ഒരു നേരത്തെ തീരുമാനിച്ചിരുന്ന ഒരു പ്രൈസിൽ എന്ത് ചെയ്യുന്നു? We need to repurchase the item. What item? That financing the asset. അതായത് സെക്യൂരിറ്റീസ്, selling the securities to the RBI for such credit. അതിനുള്ള റേറ്റ് ആണ് what is that? The repo rate or the repurchase rate. So the repo rate or the repurchase rate is the rate at which the banks may borrow the money from RBI for a shorter period by selling their securities or the or financing the assets to the RBI with an agreement to repurchase it at a future date with a predetermined price. മുൻകൂട്ടി തീരുമാനിച്ച, നേരത്തെ തീരുമാനിച്ച ഒരു പ്രൈസ് പ്രകാരം അവർ റീപർച്ചേസ് ചെയ്യുന്നു. ഒരു എഗ്രിമെന്റ് ഉണ്ട്. ആ എഗ്രിമെന്റിൽ പറഞ്ഞിരിക്കുന്ന ഇന്ന പ്രൈസിൽ, നേരത്തെ എഗ്രി ചെയ്ത ആ പ്രൈസിൽ കൊടുക്കുന്ന എന്ത് ഐറ്റം, സെക്യൂരിറ്റീസ്, അത് തിരികെ മേടിച്ചോളാം എന്നുള്ള ഒരു എഗ്രിമെന്റ് ഉണ്ട്. അപ്പൊ എന്തിനാ ഇവർ കൊടുക്കുന്നത്, വിൽക്കുന്നത്? In order to get money from as loans from RBI. Clear? So that is the repo rate or the repurchase rate. So the rate at which the banks may borrow the money from the RBI for a shorter period of time by selling their securities or financing the assets to the RBI with an agreement to repurchase it at a future date or a predetermined price. Though the bank rate and the repo rate appear the similar, there is a fundamental difference between them. That is, bank rate no sale of security, while repo rate there should be a sale of security at a predetermined price that should be agreed upon the commercial bank and the RBI so that they can purchase it at a later date. So that is the difference between a bank rate and a which one, repo rate. Clear? So that is the repo rate or repurchase rate. Then what is a reverse repo rate? It is the rate of interest at which the RBI borrow money from commercial bank within the country for a short duration. The bank deposits their short-term excess fund with the RBI and earns interest on it. The reverse repo rate is used by the RBI as a monetary policy instrument which can be used to control the money supply in a country also. So that is the reverse repo rate. It is the rate of interest at which the RBI borrow money from commercial banks. വാണിജ്യ ബാങ്കിൽ നിന്ന് പണം കടമെടുക്കുന്നു ആര്? RBI. Okay, RBI borrow money from commercial banks within the country for a short duration. ഒരു കുറച്ച് കാലയളവിലേക്ക്. Okay, so within the country for a short duration, and the bank may deposit their short-term excess fund. അവർ ബാങ്ക് എന്ത് ചെയ്യുന്നു? They can deposit the short-term excess fund with the RBI and earns interest on it. അതിന് പലിശയും അവർക്ക് കിട്ടുന്നു. So that is the case with the reverse repo rate. അപ്പോൾ repo rate എന്താണെന്ന് മനസ്സിലായി, reverse repo rate എന്താണെന്ന് മനസ്സിലായി. So that is the first case, that is the bank rate policy. അപ്പോൾ ഈ ബാങ്ക് റേറ്റിനകത്താണ്, ബാങ്ക് റേറ്റ് എന്ന് പറഞ്ഞാൽ സ്റ്റാൻഡേർഡ് റേറ്റ് ആണ്, വേറെ ഒന്നും അതിനകത്ത് ഇതില്ല. സ്റ്റാൻഡേർഡ് റേറ്റ് ടു ബൈ ഓർ ഡിസ്കൗണ്ട് ദ ബിൽ ഓഫ് എക്സ്ചേഞ്ച് ഓർ അതർ കൊമേഴ്ഷ്യൽ പേപ്പേഴ്സ്. അതായത് പ്രോമിസറി നോട്ട് ആകാം, ബിൽ ഓഫ് എക്സ്ചേഞ്ച് ആകാം, എന്ത് അങ്ങനത്തെയുള്ള വാണിജ്യപരമായ പേപ്പേഴ്സ്. ഓക്കെ, അതിന്റെ ബൈ വാങ്ങുന്നതിന് there should be a standard rate fixed. That standard rate is called the bank rate. And then we see the repo rate and the reverse repo rate. So repurchase rate, lending the money to the commercial bank. RBI is lending the money to a commercial bank at a rate in the event of any shortfall of fund. Fund കുറയുന്നതിനനുസരിച്ച് they are lending the money to the commercial bank. That is based on some rate, isn't it? That rate is called the repurchase rate. ഇനി വേറൊരു രീതി പറയുകയാണെങ്കിൽ എങ്ങനെയാണ്? Repurchase rate is the rate at which the banks may borrow money from the RBI for a shorter period of time by selling their securities to the RBI with an agreement to repurchase it at a predetermined price agreed upon in the previous days, and it should be in a future date. That is the repurchase rate. Then the reverse repo rate എന്ന് പറഞ്ഞാൽ what is that? It is the rate of interest at which the RBI may borrow money from commercial banks within the country for a short duration. കുറച്ച് കാലയളവിലേക്ക്. Okay, they can borrow money from the which one? RBI borrow money from the commercial bank with the rate of interest, so that the bank may deposit their short-term excess fund. Okay, അങ്ങനെ വാങ്ങിച്ചതിന് extra വരുന്ന amount, that is to be which one, deposit the short-term excess fund with the RBI and earn an interest. അതിനകത്തുനിന്നൊരു earn ചെയ്യുന്നു, വരുമാനം earn ചെയ്യുന്നു. That is the interest to be earned from the along with the reverse repo rate. That is the case with regard to which one, bank rate policy, the RR and RRR, the repo rate and reverse repo rate. Next, what is a variable cash reserve ratio? Second point is with regard to that, the quantitative controls are this one. So, variable cash reserve ratio, what is it? The scheduled commercial banks are required to maintain minimum cash balance with the Reserve Bank. Commercial bank, scheduled ആയിട്ടുള്ള, നമ്മൾ നേരത്തെ കണ്ടു ഷെഡ്യൂൾഡ് ഉണ്ട്, നോൺ ഷെഡ്യൂൾഡ് ഉണ്ട്. അതിൽ ഷെഡ്യൂൾഡ് ബാങ്ക് രജിസ്റ്റർ ചെയ്തിരിക്കുന്നത്, ഓക്കെ, RBI ആയിട്ട് രജിസ്റ്റർ ചെയ്തിരിക്കുന്ന ബാങ്ക്സ്, അതാണ് ഷെഡ്യൂൾഡ് ബാങ്ക്സ്. Excuse me. Are scheduled banks that is required to maintain a minimum cash balance with the Reserve Bank. Therefore, the Reserve Bank has the power to change the percentage of the cash reserve that is to be kept with by varying such a reserve. The banks could undertake the quantitative control effectively. So they can effectively control this thing. The present cash reserve ratio is 4% and repo rate is 6%. Reverse repo rate is, what is that? Sorry, repo rate is 6.5, reverse repo rate is 6%, and the variable cash reserve ratio, that is the 4%. So, what it is? Variable cash reserve ratio. അതായത് ഷെഡ്യൂൾഡ് കൊമേഴ്ഷ്യൽ ബാങ്ക് എന്ത് ചെയ്യണം? RBI-ആയിട്ട് ഒരു മിനിമം ക്യാഷ് ബാലൻസ് മെയിൻറ്റെയിൻ ചെയ്തിരിക്കണം. അങ്ങനെ മെയിൻറ്റെയിൻ ചെയ്യുമ്പോൾ the RBI has the power to change the percentage of such a cash reserve. Extra reserve ആയിട്ട് keep ചെയ്യുന്ന cash, that is to be maintained with the RBI or maintaining a balance with the RBI, so that the RBI can change the percentage of such a reserve ratio. So currently how much? 4% with effect from 6/4/2017. So that is the variable cash reserve ratio. So under the bank rate policy, what is there? Repo rate and reverse repo rate, and then variable cash reserve ratio. The third is variation of statutory liquidity requirements. So what is that? The commercial banks observe the impact of variable reserve ratio. നേരത്തെ പറഞ്ഞ variable cash reserve ratio യുടെ ആ ഒരു impact, that is to be, what is that? In order to offset that, അതിന്റെ ആ ഒരു ചേഞ്ചിന് അഗേൻസ്റ്റ് ആയിട്ട്, ഓക്കെ, by liquidating the government security. അതിന് അഗേൻസ്റ്റ് ആയിട്ട്, എന്തിന് അഗേൻസ്റ്റ് ആയിട്ട്? The variable cash reserve ratioയ്ക്ക് അഗേൻസ്റ്റ് ആയിട്ട്, അല്ലെങ്കിൽ അതിന്റെ റിസൾട്ടിന് വിപരീതമായിട്ട് they are taking or liquidating the government security. To prevent this, ഇത് ഒഴിവാക്കാൻ വേണ്ടിയിട്ട് സെക്ഷൻ 24 പ്രകാരം ആക്ട്, Banking Regulation Act prescribes that bank has to maintain a liquid asset in cash, gold, and unencumbered securities amounting to not less than 20% of the total demand and time liability. So what they need to, important part is this one, the section 24 of the Banking Regulation Act. Banking Regulation Act section 24 prakaram, what they are telling, the banks have to maintain a liquid cash or liquid asset. Liquid asset ആയിട്ട് keep ചെയ്തിരിക്കണം. എന്തൊക്കെ? The cash to be maintained, the gold to be maintained, and also the unencumbered, that is not to be collaterally mortgaged securities. Okay, unencumbered securities amounting to not less than 20% of the total demand and time liability. So that is the case. Which one? Variation of the statutory liquidity requirement. Means what? In order to offset the impact of such a reserve ratio, the bank need to liquidate the securities. Government securities അവിടെ liquidate ചെയ്യേണ്ടതായിട്ട് വരുന്നു, പേ ഓഫ് ചെയ്യേണ്ടതായിട്ട് വരുന്നു, അതാണ് പറയുന്നത്. സോ അതിന് സെക്ഷൻ 24 of the Banking Regulation Act prescribes that the banks have to maintain the liquid assets in cash, gold, or encumbered securities amounting to not less than 20% of the total demand and time liability. മൊത്തം ഇതിന്റെ 20% they need to maintain what? The cash, otherwise the gold or the securities, their liquid position as what? Asset. ഇതിന്റെ ലിക്വിഡ് അസറ്റ് ആയിട്ട് കീപ്പ് ചെയ്തിരിക്കണം എന്നാണ് പറഞ്ഞിരിക്കുന്നത്. So that is the case with the statutory liquidity requirement. The Act was amended in 1962, requiring the banks to maintain a minimum amount of liquid assets equal to 25% of their demand and time liability. So, 25% they need to maintain at least 25%. Since 1972, the statutory liquidity requirement have been frequently changed, and now the present statutory liquidity requirement is 20.5% from 6/4/17. അപ്പോൾ എല്ലാം ചേഞ്ച് ചെയ്തിരിക്കുന്നത് 6/4/17 അതായത് വേരിയബിൾ ക്യാഷ് റിസർവ് റേഷ്യോ ആസ് പെർ ദിസ് 4% ആണ്. റിപ്പോ റേറ്റ് 6.5% ആണ് ആൻഡ് റിവേഴ്സ് റിപ്പോ റേറ്റ് 6% ആണ്. അതൊക്കെ ഇപ്പം ചേഞ്ച് ചെയ്തും ഈയിടെ ചേഞ്ച് ചെയ്തിട്ടുണ്ടെന്ന് തോന്നുന്നു. ബഡ്ജറ്റ് ഓരോ ഇതിന്റെ വരുമ്പം അത് ചേഞ്ച് ആകും. ഓക്കെ, ദെൻ വേരിയേഷൻ ഓഫ് സ്റ്റാറ്റ്യൂട്ടറി ലിക്വിഡിറ്റി റിക്വയർമെന്റ്. അതിനകത്ത് എന്താ പറയുന്നത്? കൊമേഴ്ഷ്യൽ ബാങ്ക്സ് എന്ത് ചെയ്യണം? വേരിയബിൾ റിസർവ് റേഷ്യോയുടെ ഇമ്പാക്ട് കൊണ്ട്, അതിന്റെ റിസൾട്ട് കൊണ്ട് ദേ നീഡ് ടു ഓഫ്സെറ്റ് ഇറ്റ്. അതിന് എഗെയിൻസ്റ്റ് ആയിട്ട് ദേ നീഡ് ടു ലിക്വിഡേറ്റ് ദി ഗവൺമെന്റ് സെക്യൂരിറ്റി. And for such purpose, Section 24, in order to not to do that one, Section 24 of the Regulation Act, Banking Regulation Act, prescribes that the banks have to maintain liquid assets in the form of cash or gold or encumbered securities amounting to not less than 20% of the total demand and the liability also. Time liability also. അതായത് എത്ര ബാധ്യതയാണെങ്കിലും അതുപോലെ എത്ര ഡിമാൻഡ് ഉണ്ടെങ്കിലും നോട്ട് ലെസ് ദാൻ 20% എങ്കിലും എന്ത് ചെയ്തിരിക്കണം? കുറയാതെ 20% ക്യാഷ്, ഗോൾഡ്, എൻക്യുംബേർഡ് സെക്യൂരിറ്റീസിനെ ലിക്വിഡ് അസറ്റ് ആയിട്ട് മെയിൻറ്റെയിൻ ചെയ്തിരിക്കണം. ദാറ്റ് ഈസ് ദ കേസ് വിത്ത് സ്റ്റാറ്റ്യൂട്ടറി ലിക്വിഡിറ്റി റിക്വയർമെന്റ്. Another one is the open market operation. What is it? The open market operation refers to the purchase and sale of assets such as gold, government security, foreign exchange, and even company shares by the RBI. So, what is that? In order to purchase and sale of the securities, or sorry, assets, ആസ്തികൾ, അതായത് ഗോൾഡ് ആകാം, ഗവൺമെന്റ് സെക്യൂരിറ്റീസ് ആകാം, ഫോറക്സ് ആകാം, ഈവൻ കമ്പനി ആൻഡ് ഓൾസോ foreign exchange, and even the company shares also by the Reserve Bank of India. അപ്പോൾ എന്തെല്ലാമാണ്? പർച്ചേസ് ആൻഡ് സെയിൽ ഓഫ് ദ അസറ്റ്സ് ലൈക്ക് gold, government security, foreign exchange, and even the company shares. കമ്പനിയുടെ ഷെയർ തന്നെയാകാം. നീഡ് ടു ബി ഓൺഡ് ബൈ whom? The Reserve Bank of India. So need to purchase and sale of the assets by Reserve Bank of India എന്നുള്ളതാണ് പറഞ്ഞിരിക്കുന്നത്. That is the open market operation. So keep it in mind. Open market. In the open market, what they need to purchase and sale of the assets by the RBI. So what all assets? Maybe the gold, maybe the government security, maybe the foreign exchange reserve, or even the company share. In practice, they are confined to the purchase and sale of the government securities also. Section 17(8) of the Reserve Bank of India Act authorizes the bank to engage in the purchase and sale of the securities of the central, state government, or of such securities of the local market or local authorities. So what need to be? Section 17(8) of the Reserve Bank of India Act that authorizes the bank to engage in the purchase and sale of securities. Securities in the sense assets. Purchase and sale of securities of the central, state government, or of such securities of the local authorities. The open market operation of the RBI has two interrelated aspects. That is, one is instrument of monetary policy and also the management of public debts. So keep it in mind. Two things you need to be as per the open market operation that is to be performed by the RBI. Two interrelated aspects are there. One is instrument of monetary policy. പണസംബന്ധമായിട്ടുള്ള ഒരു policy, monetary thing that is there. Okay, and also the management of public debts. പൊതുകടം manage ചെയ്യുന്നതിന്. So instrument of monetary policy and the management of public debts or managing public debts. So by the sale of security of the RBI, the cash base of commercial bank is decreased, and by the purchase of security, the cash base of commercial banks is increased. So RBIയുടെ സെയിൽ ആണെങ്കിൽ, സെക്യൂരിറ്റീസ് സെയിൽ ആണെങ്കിൽ, RBI വിൽക്കുകയാണെങ്കിൽ, the cash base of the commercial bank is decreased, cash to be decreased, and if it is a purchased one, cash to be increased. Therefore, open market operations have been used in this way in the course of monetary policy. At present, they are used to assist the government in the borrowing operation. They are mostly used as an instrument of the public debt management and to provide seasonal finance by purchasing the securities. Moreover, the open market operations are entirely with the government bonds. Government related securities and bonds are an open market operation because they are the sale and purchase of the assets of the securities. അതാണ് ഓർക്കേണ്ടത്. So these are the thing that is to be the quantitative as well as the qualitative control measures that is to be taken by the RBI. So that is also a function with regard to RBI. So these are the functions with regard to RBI and in total. So once again, what is that? Monopoly of the note issue, that is the first thing. Acting as a banker to government, like banker as acting as a banker's bank or acting as a financial advisor as well as a financial agent like that. Then custodian of the forex reserve, another one. Pinio, custodian of the forex reserve. Then acting as a banker's bank. Then bank of settlement and clearance, also an information and a research function to be there, and the controller of credit, like a qualitative as well as quantitative control means the volume of the credit to be mentioned or the flow of the credit to be assessed. That is the quantitative as well as the qualitative. Under the quantitative thing, the bank rate policy is there. Today we see that one. Bank rate policy, the standard rate to be fixed to buy or sell or to buy only. Okay, the buy or discounting the bill of exchange or any other commercial papers that are eligible for the purchase under the Act. Banking Regulation Act പ്രകാരം പർച്ചേസ് ചെയ്യുന്നതിന് വേണ്ടിയിട്ട് വിൽക്കുന്നു. ആ വിൽക്കുന്നതില് some standard policies to be set or standard rate to be set. That is the bank rate policy. Under that, the repo rate and reverse repo rate is there. Okay, repurchase rate and again repurchase rate. That is the reverse repo. Okay, RRR. Okay, so 6.5 is the current reverse rate, repo rate, and RRR it is 6%. And another point is the variable cash reserve ratio. That means what? To maintain a minimum cash balance with the RBI by the commercial banks. A reserve should be maintained. So that reserve is what? The variable cash reserve ratio. It is the 4% as of 6/4/2017. And then variation of statutory liquidity requirement is there. That is, in order to have an impact of this, what is that? The previous case, that is the variable cash reserve ratio, the commercial bank may offset it by liquidating the government security. For such a liquidation, what they are doing to do, in order to be liquidated, the bank need to maintain the liquid assets in the form of the gold or cash or government securities or unencumbered securities that amounts to not less than 20% of the total demand. മൊത്തം ഇതിന്റെ 20% കുറയാത്ത ഒരു പെർസെൻറ്റേജ് ഉണ്ടായിരിക്കണം. What need to be maintained? The gold, then cash or unencumbered security. So currently it is how much? 25%, and then now change it to 20.5%. So that is the variation of statutory liquidity requirement. And finally, the open market operation, in the sense the purchase and sale of the assets such as the gold, government securities, foreign exchange, and even the company shares, that is to be by the Reserve Bank of India. That is the purchase and sale of the assets by the RBI. അങ്ങനെ പർച്ചേസ് ചെയ്യുമ്പോൾ എന്തുണ്ടാകുന്നു? Section 17(8) of the Reserve Bank of India authorizes the bank to engage in the purchase and sale of such securities of the central government as well as the state governments or for the securities of the local authorities. That is the thing you need to understood from open market operation. Means open market is there for purchasing and sale of the securities. I think you are clear with these portions. So please have a look at today's topic, and please let me know if anybody is having any doubt. And please see or please verify, please check the video, and after uploading, and you need to see, then please confirm. So thank you for